So I've been playing with ChatGPT-4o for finance a bit more, and I asked it to create a Python backtesting tool where we can type in a monthly income and a stock symbol, for instance Tesla stock, TSLA, and yeah, we want to model or backtest a portfolio by investing a certain amount, doing dollar cost averaging, a certain percentage of the income. So we have we vary the savings rate between 0 and 100% on the x-axis, and on the y-axis it should output we should vary the number of years we DCA'd into this asset. For instance, 5 years, 6 years, 7 years, 8 years, 9 years, and so on. And then I want to have a heat map where we can point out different lines, such as the 100K line or so. And it beautifully spit out this code. I had to do some iteration. I just copied and pasted the code into Google Colab Portfolio Visualizer. I will give a link in the description below, so you can also play with it if you want. And you see we simply put in a symbol here. Even if you don't know Python, you can just click the link in the description below, open the Colab. If you have a Google account, you can use your Google account, copy this sheet, click on this play button, and it will run the code like this with some sample value. So for instance, if you have a monthly income of 5K and you have a max number of years like 10, and a savings rate like 100% is the maximum savings rate, right? And now it creates a heat map for us. And so this heat map, I think it looks pretty nice. If you check it out. So here, maybe let's zoom a bit out. Okay, so now this is the result of using like Tesla, assuming a monthly income of 5,000 over 10 years. And here we have a savings rate varying on the y-axis, varying from 0% at the top. So if we save 0% for 10 years in Tesla stock, we get 0 portfolio value. If we save 100% of our income in Tesla stock, in the first year we will get like 50K roughly, right? And probably should be a bit more. No, it's not more because the Tesla stock has probably crashed in the first year, and or crashed, reduced by 10-15% or so. But then of course volatility is our friend with such a savings rate, so we can see like the model portfolio value. It's 10 to the power of 6, so we have a value of 100K. Here, if you have a value of 1.0 in this color, and as we approach like the more bluish colors, we get a portfolio value of millions, right, of USD. So for instance, here we have we see if we save 50% of our income, we're making 5,000 a month, and we do it for, say here, it's like 8 years. Into Tesla stock, we would have reached 1.07 million, right? So this is a $1 million. We have crossed the $1 million line. And as the money compounds longer, and we are in the right stock, so to say, our portfolio value would also increase. So it's easier to go to this $1 million threshold, even with the smaller savings rate. So time basically compensates for lower saving rates nicely. So this is like very nice tools like this we can try. So let's try different values. So for instance, we can Google the average US income. It's 37K. So let's put in 37K. This is per year divided by 12. Maybe there's also a tax, but if you have like the average income, probably the tax rate isn't that high. So maybe let's make it 0.85. So assume we have a 15% tax rate on this. I don't know, I'm not a tax expert, but let's just assume this. And let's run this code. Could we become a millionaire by choosing the right company and investing for less than a decade with a certain saving rate? Let's see. So if we would have invested, there's a million line here in this bluish color, we crossed the $1 million threshold. For instance, we could accomplish it with an 80% savings rate in 8 years, or we could have accomplished it with a 65% savings rate in 9 years. Or if we would have identified this opportunity 1 year earlier, we could have reached with a 50% savings rate on average US income. Could have reached the $1 million threshold in 10 years. So 10 years, would it be possible to identify Tesla 10 years ago? So let's check out the book, Vance, Elon Musk book. I want to check out this book here. This is the book not the Walter Isaacson, this one here. So this book, I think it appeared. No, I want to have the English version, right? Amazon.com. And let's see, we want Elon Musk book. And we don't want the newest book by Walter Isaacson, which is highly recommended, right? But we want this by, Ashley Vance. So this one appeared in 2017, right? So he was already written about. If we would have read a couple of books or so, we could have identified this in 2014. But of course, 2017 even would be enough, right? Because also 7 years would be enough with a high enough savings rate. So it is possible generally. People did it, right? So it's possible, but of course it's not probable. So many people are not on the right side of change. They don't focus on identifying these type of opportunities, and they are not bold enough to go all in on high conviction bets. So let's check out for other symbols, other investments. So for instance, now Nvidia, everybody speaks about Nvidia. So let's check out Nvidia. The same for the average US income, 37K. Would have been easier, right? Because it was like the best performing stock in here. You could have reached like a $1 million portfolio in 5 years with a 75% aggressive savings rate. Of course, it takes a really aggressive stance. Nobody would invest 75% of their net income into a single stock, right? But some people would, and they fared very well, obviously. Okay, but let's say something more reasonable, say a 30% savings rate, we would have crossed the 1 million with a 30% savings rate. We would have crossed the $1 million threshold in 8 years. So possible for Nvidia as well. Of course, Nvidia is one of the best companies. And now this assumes that this is just the average US income. Let's check out the average US income of, say, in tech, right? In tech, because we are a tech channel. In tech, salary is like 50K or so. Let's say programmer makes like 69K. Some experienced workers make 124K. So let's assume average income. What else can I, like lower management? Okay, this is like management. In management, it was like 70K or so. Median household was 70K. So let's assume a bit higher number. If we are a bit more aggressive, we can let's make it 70K here. Should be possible for most people, right? It's like, it's a bit more than 5,000. Let's make it really aggressive. Let's make it maybe 120K, because I think most people can actually accomplish 6-figure income. So if you would have 6-figure income and say, let's take another symbol. Probably this wouldn't work, right? Would it? No, you see, it doesn't change anymore, so there's no fresh data on this. Okay, so let's try this one maybe. Okay. Yeah. Okay. So so if you would have invested in GBTC, which is like a fund, as a stock ticker, that is a proxy for BTC, then the portfolio value obviously would have exploded. So it doesn't even fit in the sales. So in only a couple of years. But of course, this would also mean that you would have to identify BTC in 2014. I think the opportunity is still there. In 10 years, we will probably see much higher BTC prices. In 2014, it was also not super early, right? It was like, I know the time, 2014. Many people used it already. I mean, but we wouldn't invest like 50% of the paycheck or so. We would maybe invest 5% or so, which would be more reasonable. But then, of course, if you have 5%, this would also be enough. So see here, after 5 years of investing 5% of a paycheck, of a 6-figure paycheck, it would be enough. So let's say the paycheck, the month, oh, this is the monthly income. Oh, obviously now this is complete garbage. The monthly income should be, so let's assume, again, we have a 69K divided by 12. So this is our monthly income. That's why the numbers also are crazy, right? Okay, now it makes more sense. Okay, now after a couple of years, again, like 7 years with a 30%, no, even like say 8 years with a 30% savings rate into GBTC, it would have yielded $1.4 million Nasdaq. Okay, so it's possible. So if it's possible below 10 years. There are many examples. You would have to identify trends early. Let's make some simple investments like Apple. Also, 10 years ago was much more obvious than the others we checked. And this is like on a median household salary. Let's see if we can cross the 1 million there. Yes, with an aggressive savings rate. Often you would need a decade of aggressively saving into a winner technology, right, to make $1 million. So it is not without risk. This is like 9 years, but it's also not highly risky, I would say, because Apple was already one of the dominating tech companies. It was very obvious in 2014. It was already one of the biggest companies on the planet, if not the biggest, right? So biggest company 2014 was Walmart, actually the world's largest list of largest companies by revenue. I actually want market cap ranking companies in 2014. Okay, so Apple was the highest market cap company in 2014. Then Microsoft and Google. Not a lot has changed in this regard, right? So let's say, so we have just checked out Apple. It's just investing in the top ranking company in 2014, right? And doesn't require a lot of stock selection, stock picking skills, right? Let's try Microsoft with a median US household income for 10 years with an aggressive savings rate. And of course, it could be any like combination of this. You could spend 10% or so of your income on 5 companies to average out a 50% savings rate in order to accumulate $1 million Nasdaq, maybe diversified across 5 companies or so. So this is just, I like these kind of tools because they give you a glimpse into the future by using the past. Past is not indicative of the future. Future will be different, but it shows that like people who identify sticky trends and aggressively pursue the opportunities within those identified trends can often benefit in a decade or so. Often it takes a decade or less. Sometimes if you're lucky, less, right? Sometimes it could take you only 5 years, but often it would take a decade of work, like here 8 years for Microsoft with a 60% savings rate, or if you have a more reasonable 20% savings rate, it wouldn't be enough just to invest in Microsoft, but probably maybe it would take 12 years or so, or 13 years or something like this. But this is for the biggest company on the planet in 2014, so which is 10 years ago. So this would would not be, so this is not similar to say Tesla, that is currently not even the biggest company on the planet, but probably will be in 10 years. So so let's check out the market cap ranking here. Something like, say, Oracle, for instance. So 10 years ago, Oracle was a big company, but not the biggest company. What is the ticker symbol of Oracle? Ticker symbol Oracle. ORC. Let's see if it has the data. Probably would have fared very well as well by doing something like this. So here we see, yeah, not quite as good as the others, but I mean still quite a success, right? So investing, for instance, 10% with a 10% savings rate after 10 years would yield a, it's only 26,000. Is this correct? Max savings rate. Yeah, okay, this is correct. And if you would have like a 40% savings rate, it would yield like 105,000 after 10 years. Okay, so of course this is a loser. You could also lose everything. Most people wouldn't have thought Oracle would be one of the big winners, right, in the future. But I mean, of course, you will be right with, you will be wrong with some of the bets or a portion of the bets, and yeah, that's why diversification is so important. Here another like more obvious play would be Facebook or Meta. So let's try Meta. We put in Meta, we put in the average monthly income of a US household over 10 years. So let's see the savings rate we need to cross 1 million. Yeah, so roughly 60% or 50% in 10 years. If you, yeah, so if you like a 50% savings rate in 10 years would be 1 million. So probably the best thing would be to identify 5 high conviction bets or 3 high conviction bets and split the savings of those, so that if there was one Oracle within the high conviction bets, then it wouldn't harm the total portfolio value too much. And of course, it's always risky. There's no outsized gains without risk. You could lose more than you put in, but it can be seen that, like, unlike investing in the S&P 500, you could cross the $1 million threshold in 10 years or less by investing aggressively with a high savings rate and into the disruptive companies of our times. Even though those disruptive companies, you wouldn't have to identify them very early, you could also ride a big like decade-long trend. You could also invest in the biggest market cap companies. So from the 5 examples or so we chose, it was possible to reach $1 million status, even though those companies have already won, right? In 2014, they were already the biggest market cap companies. And so we wouldn't need to be early investors in Facebook or so, right? We wouldn't have to do any venture capital investments. We would just invest in solid plays that have good future ahead, right? And we would have to identify winners early. And so my 10-year compound annual growth rate was north of 49%, maybe a bit more even. So over the last 10 years, over the last decade. So and I invested in kind of very obvious plays in hindsight, right? And I also had my share of failures, but often the winners overcompensate for the failures we had. So if you like those kind of financial explorations using ChatGPT-4o and new technologies, then give me a like, subscribe to the channel. Thanks for watching the video, and see you in the next video. Bye.